Hello, good evening, and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to the Budget 2026 2027 analysis session. This is Shyam here, taking up the comprehensive analysis of the budget presented by the Finance Minister today morning. Before I start the discussion, please do let me know that I'm audible and visible for all of you. Those present, please do give the confirmation. Am I audible and visible for all of you? Thanks a lot. So before I start with the first set of announcements done by the Finance Minister, here are the two very important announcements. The budget as well as economic survey are important for your prelims examination as well as mains examination. So to test whether you have understood the budget as well as the concepts in economic survey correctly or not, the best way is to attempt a test. On February 8th, make a note of the date. On February 8th at 11 a.m., the Unacademy is going to conduct the biggest budget and economic survey test for all the UPSC aspirants, and that is those who are appearing for the Civil Services Examination 2026. Now, how do you appear for the test? Simple. One way is look at the comment section of the video. There will be a link which has been pinned. Click on the link, register for the test. Now, those who will watch the session in a recorded format later, you can go to the description box of the video. A link will be provided there. Click on the link and register for the test. Do not miss out. Budget and economic survey are indispensable for you. Now, second, a lot of you earlier have sent a mail to me or have requested in the videos of, let's say, the other subjects, etc., asking for a comprehensive analysis of the economic survey, chapter by chapter analysis. This week, I'll be taking up the comprehensive analysis of economic survey and we will go chapter by chapter. But for that, all you need to do is scan this particular QR code. You will be joining our Unacademy IAS English official Telegram channel. I'm asking you to join the channel for a simple reason. The discussion on the economic survey, which I'll do comprehensively chapter by chapter, will happen on our platform in the form of special classes. Again, absolutely free, nothing to pay for that. But how do you know when the class is scheduled? On which date the class is scheduled? All this information along with the class link will be pasted in our official channel. So do not miss out. Use the QR code, scan, join, and let's understand the economic survey also in detail. Now, let me start. The Government of India, or specifically the Finance Minister today, for the 9th consecutive time, presented the Union Budget. Now, the presentation has been done in a time period wherein the Indian economy is facing certain issues in the domestic market as well as external market as well. For example, because of the frictions that are happening in the global market, some of the commodities prices have increased, or some of the commodities the supply has been disrupted. Major trading partners such as USA has imposed tariff barriers on India and threatens to impose higher amount of tariff barriers if the present bill in the Congress is passed. In addition to that, in the domestic market itself, there are multiple issues that Indian economy is facing. For example, there is issue associated with, right, let's say agriculture labor, issues associated with rupee depreciation, MSME sector, etc. Having said so, understand the other side of the coin as well. Does it mean Indian economy is performing very badly in the current situation? Absolutely no. The GDP growth rate, if you look at the GDP growth rate, India is the fastest growing economy in the world. The fastest growing economy in the world. If you look at the inflation rate, for December, the inflation rate is 1.3%. And for the 9 months, April to December, the inflation rate was 1.7%, much lower than mandated 4% under the inflation targeting for Reserve Bank of India. Look at the forex reserves. India's forex reserves have crossed more than $700 billion. In agriculture, we have become the largest producer of rice in the global market. So it's not that everything is bad in terms of the factors associated with the Indian economy. There are certain concerns. In this particular situation, the budget has been presented. So what are the important announcements done by the finance minister? Let's analyze the announcements. First, in the area of MSME, micro, small, medium enterprises. Why this particular area is so important for the Indian economy? The MSMEs account for large production, contribution to GDP, GVA, as well as exports and employment generation. These are very, very important. But whenever you talk about the global uncertainty, global volatility, etc., these are also the hardest hit. These are also the hardest hit. So, in order to provide certain protection, promote MSME, what kind of reforms have been announced by the government? The finance minister simply stated the government will be following a three-pronged approach. Three-pronged approach. What are these? One, the government will be establishing an equity support. There is already a type of equity support. The government will be establishing an equity support. Now, what is the basic idea of an equity support that has been proposed under this? That is, right, 10,000 crore rupees. The idea of equity support is the government through one more financial institution. I repeat, government will not directly invest and get the equity of the MSMEs. No. What the government generally does, through another institution, right? One more financial institution, which is under the government of India. They will provide the funds to this particular institution, and this is basically called as a daughter fund. Please remember, this is essentially called as a daughter fund. So a daughter fund is created, and from the daughter fund, we are going to identify some of the MSMEs which are viable in nature, which have large potential to grow in the economy. And we will be providing equity funding. Equity funding essentially means ownership funding. Shares are purchased and money is provided. Ownership is taken, money is provided. And mind you, this is not a debt. Debt is loan. It is not a debt. It is essentially equity linked investment. That is one. Dedicated 10,000 crore SME growth fund will be set up. In addition to this, there is also discussion associated with liquidity support through TREDS platform. What is the basic idea for TREDS? TREDS stands for Trade Related E-Discounting System. This is a platform which has been set up by RBI. Using the platform, essentially, the receivables are traded. Now, what is the basic idea for receivable? Imagine I'm a micro enterprise. You are a company. You will purchase something from me with a promise of paying after 45 days. Now, there is a piece of paper, this is called as a receivable. There is a piece of paper, this is called as receivable. Instead of having a physical copy, it will be in the form of a digital copy. Now, this digital receivable, that is piece of paper in the digital form, I can sell it to somebody else, a financier, and get the money. Reason being, what if I need the money after 30 days? What if I need the money after, let's say, 25 days? I need the money after 15 days. I can simply provide it to or transfer it to a financier, get the money. Now, this particular platform has been set up by Reserve Bank of India. There are multiple entities which are offering this facility, multiple financiers who are part of the facility. What is the announcement of the government of India? All the CPSEs will be present on the TREDS platform. All the CPSEs will be present on the TREDS platform. All the CPSEs, which means an SME, right, that is small and micro enterprise, which will sell certain inventory to CPSE. Now that CPSE has to provide the receivables, that is the receipt, in the digital form through the TREDS only. And not just this. The government also has proposed one more very important initiative here. We have to wait and see how it will be implemented. That is concept of the TREDS receivables as asset-backed securities. TREDS receivables as asset-backed securities. Meaning what? These particular pieces of paper in digital form, can I basically borrow in the market or basically sell it to somebody else with a, or basically show this to somebody else and take money from them with a promise of payment in the future? Right? That is basically the asset-backed securities. I'll repeat it again. I will show this particular piece of paper that is receivable to somebody. They will give the money to me because there is a guarantee that this piece of paper will help me recover money from you, that is a buyer, in the future. So TREDS-backed receivables as asset-backed securities also has been proposed. credit guarantee system has been proposed. What is a credit guarantee system? Credit guarantee support mechanism through CGT MSE. And some of you will be thinking, sir, words are not visible. I can magnify this and show it to you, but please do not panic. Once the session is over, you will be able to download the PDF, right? You will be able to download the PDF. Please don't worry. So the credit guarantee support mechanism through CGT MSA has been proposed. Essentially, the idea is credit guarantee trust for micro and small enterprises is already there. It will provide certain credit guarantees, meaning a bank will provide a loan. Now, guarantees to a certain extent on the loan will be guaranteed by the CGT MSE to the bank. This will help the micro enterprises, small enterprises, etc., right, essentially to borrow at lesser rate of interest. So even this has been proposed associated with invoice discounting on TREDS platform. Everybody is okay? In addition to this, there is also professional support that has been proposed now. What is a professional support they are discussing here? Simple. The government will facilitate certain institutions and there will be, right, certain corporate mitras, that is experts who will be trained. Now these corporate mitras will help the micro small enterprises in fulfilling the compliance requirement. In a cost effective manner, they will help the MSCs to fulfill whatever compliance requirements of Government of India there. They will be able to meet these particular requirements. Everybody is okay? Right, so these are some of the announcements by the Government of India in the context of MSME, micro, small, medium enterprises. Can I move on to the next one now? I want everybody to answer yes or no. Everybody is able to follow the discussion that I'm doing? Next one, in the financial sector. What have been the announcements in the financial sector? Let's start. First and foremost, the Government of India simply says, the banking sector will play a very important role in order for the government to achieve the objective of Viksit Bharat. You want to achieve the objective of Viksit Bharat by 2047? Banks will play a very important role. How so? Banks will provide lot of loans for industries, for infrastructure, for the consumers, etc. Lot of loans are provided. Mobilization of the deposits is done. Savings, right? Mobilization is done by the banks. So banks play a very important role. That's a reason the government has announced that they will set up a high-level committee. Who is going to head it? No idea as of now. No announcement has been done regarding that. Do not worry about this as of now. It will come later in the newspapers. So high-level committee on banking for Viksit Bharat will be set up. This committee will study the structure of banking, what can be the changes done, how better the banking structure can be utilized in order to achieve the objectives, etc. That recommendation will be provided by the high-level committee. And next one, have a look at this. Incentive of 100 crore rupees. Have a look at the next point. Incentive of 100 crore for single issuance of municipal bonds. Now, the municipal bonds in recent times have been there in the newspaper. Please read about it. What are the municipal bonds? These are the debt instruments which are issued by municipalities. For what purpose? They want to borrow from the market, use it for certain objective. For example, maintenance and repairs of existing infrastructure, development of new infrastructure. And just to give you a connection, a lot of these particular cities which were identified under the Smart Cities project, they were able to raise the funds in the market through the idea of a municipal bonds itself. And very recently, that is last year in the month of October and November, the Government of India has made one more very important change. That is specifically RBI. What is the change? Municipal bonds now are eligible for repo and reverse repo. Please remember this. Municipal bonds now are eligible for repo and reverse repo transaction. Then these are certain important current affairs points that you need to remember. Now, what is the announcement done by the finance minister? The finance minister basically states, we want to incentivize issuance of municipal bonds. How so? There is an incentive scheme that is announced. Earlier also under Amrit scheme it is there. Now it will be a new initiative where certain bonds which will be issued by the municipalities, if it is 1,000 crore rupees, that is the issue value is more than 1000 crore rupees, incentives will be paid by the government to the municipality. And because the government will incentivize, municipalities will be more interested in issuing more bonds, collecting more funds, which will help them raise revenues or raise money for taking care of multiple projects. And like I said, there is already an initiative. Remember this. Under Amrut, there is already an initiative under which incentivization is done. But that is done for a small issuance. Government of India now says we are going to target large issuance. That is, you want to get incentives under the new initiative, issue municipal bonds which are more than 1000 crores. Done? Right. So this is one more important announcement. Next one. Restructuring Power Finance Corporation and Rural Electrification Corporation. What is the importance of announcement? What is the important announcement? Right? Or importance of this announcement? Listen carefully. REC and PFC. Earlier, these were two different entities. Why do I say two different entities? Earlier, both were owned by Government of India. They were owned by Government of India. Power Finance Corporation, Rural Electrification Corporation. And why these are important? These are important because they will promote certain projects. They will promote long-term projects specifically under power sector. For example, you will very often come across Ujjwala Yojana, Pradhana Mantri Ujjwala Yojana. It is basically the nodal agency REC which is responsible for the implementation of this. So argument is, earlier, like I said, Rural Electrification Corporation was owned by Government of India. So in the year 2019, I'll write it separately here. In the year 2019, the Government of India sold majority of the stake in the Rural Electrification Corporation to Power Finance Corporation. And in the year 2020, there was a proposal to basically merge the Power Finance Corporation as well as the Rural Electrification Corporation. But this was not implemented. Now the Government of India simply says, I want to restructure. I want to revamp both of them. Right? Basically, they might try merging both of them, or they might try to restructure both of them, because again, I repeat this, both of them which work under the Ministry of Power are important in terms of promoting long-term infrastructure, that is power projects. So this is essentially the importance of the announcement here. Everybody is able to follow the discussion? Now somebody is saying, Navdeep, kindly provide the unannotated PPT. My dear, I'll give you both. Annotated as well as unannotated. Right? Use both of them. Whichever you want to download. Focus on the discussion. Next one. Comprehensive review of foreign exchange management for debt, non-debt instrument rules. On paper, this looks very difficult, very technical. But what is the basic idea? In recent times, there has been a lot of concern regarding attracting investments, specifically the foreign institutional investments in the domestic market. According to one data set, since January 2025, more than 22 billion worth of funds have flown out of India. Foreign investors have taken out this particular money. It's not that fundamentally something is wrong with the Indian market. No, they are worried about uncertainty. They are worried about volatility. In addition to that, they are worried about regulations in the domestic market, etc. So what has the Government of India now stated? We will review the FEMA. We will review the FEMA framework. And once you review the FEMA framework for what? Non-debt instruments. Please have a look at this. They are saying we are going to review the framework for the non-debt instrument. Non-debt means what? For, let's say, the mutual funds in the equity market, or for that matter, the shares itself. These are non-debt instrument. So FEMA framework for the non-debt instruments will be reviewed by the government, will be made much more, right, let's say, compatible with the current situation in the global market, which will help attract a lot of investments in the domestic market. Next one, introduction of market making framework and total return swaps on corporate bonds. Very technical in nature, but basic idea. Let me explain this. Please listen carefully, focus on the concept. What is this idea for total return swaps? What is this idea for total return swap? Let's assume I am a bank. Listen carefully. Let's assume I am a bank. I'll explain by writing here. Now, I have issued certain bonds, collected these particular bonds, and right, basically the money has been used in providing for the loans for infrastructure projects. In providing the loans for infra projects. So there are certain bonds with me now. Okay, there are certain bonds. Now, you are an investor in the market, let's say a mutual fund company, insurance company, etc. You want to invest in these bonds. You want to invest in these bonds. You want to get the exposure, but listen to me, but you do not want to literally purchase the bonds. You want to get the exposure to the returns on the bonds. If the bond prices increases, you want the benefit. Right? Upon maturity, the principal amount is paid, you want that benefit. Annually coupon rate is paid, you want that benefit. But you do not want to literally purchase the bond. Is it possible? Yes, there is a tool called as, right, have a look at the name of the tool, total return swap. There is a tool in the market which is called as a total return swap. What is basically the idea of a total return swap? Let me continue the same example. You are the investor. You will basically, right, look at the statement. You will basically give the money. You will give the money, but you will not take the delivery of the bonds. You will not take the delivery. You will take the exposure to the bonds. You will not take the delivery of the bonds. But if the market price of the bonds increases upon market price increases, you will get the benefit. Annually, I'll give you the coupon also. Now, some of you will be thinking, sir, why will a bank do this? Why will the bank do this? The bank will do this because I am providing this service not as a charity. I will charge a certain rate of interest to you. I will charge a certain rate of interest. So basic idea is this. Getting exposure into certain bonds without actually purchasing the bonds. Is my statement clear? I'll repeat it again. Getting exposure to certain bonds, here the corporate bonds, without actually purchasing the bonds. But you will get the returns on it. You will get the right coupon payment on this. This is called as the actual, look at the name, the total return swaps. So Government of India simply says, I'm going to promote the market for total, right, return swaps. I'll promote the market for total return swaps, right, which will help in the promotion of corporate bonds in the market. Okay, let's go forward. Tax proposal for financial sector. Tax proposal for financial sector. Focus on this carefully. Question can be asked in the preliminary examination. The finance minister has announced increase on securities transaction tax. The finance minister has announced increase in the security transaction tax. What is the basic idea of a security transaction tax? You purchase the securities, sell the securities, shares. Right, you purchase and sell them in the right recognized stock market. So Government of India back in the year 2004, under the Finance Act, introduced the concept of a securities transaction tax. The basic idea was a lot of people, they will earn profits by buying, by selling, etc. the instruments in the market, but they do not report it correctly to the government. There is always a concern associated with tax evasion there. So government simply said, whenever you transact using the securities, transact means what? Buy and sell. Now I'm going to impose certain types of taxes and those will be collected in the market itself. And that is called as securities transaction tax. This was introduced in the Finance Act of 2004, has come into force from the 1st October 2004. Is it applicable in India right now? Yes, it is applicable on the equity, right, instruments in the market. But please understand, from one type of instrument to another type of instrument, the rate will vary. Is it okay? It will vary. Who will pay varies. So please don't worry about the complete box. Just focus on the basic idea. So why this has created certain problem in the market now? It has created problem in the market because Finance Minister has announced increase in the STT. Increase in the STT which is applicable to F&O, futures and options. Right, so option premium, the STT has been increased. The futures, right, STT has been increased. Which will essentially means those investors who are involved in the F&O will have to pay more tax to the government. they will have to pay more tax to the government. And that is the reason a lot of investors are not happy with the securities transaction tax. Everybody is okay with the securities transaction tax. Can I move on to the next area? Right, so we have taken care of financial market. Let's look at agriculture. What are the important announcements in the agriculture? Let's go one by one. The government of India wants to promote production and export of high value products, high value agriculture products. Sir, what do you mean by high value agriculture products? The sandalwood, cashew, cocoa, right? Or many other commodities like this. So government of India wants to basically promote production, right, and supply of high value products. And whenever this kind of a high value product is produced by the farmer and sold, it will add to higher incomes for the farmers. Simple, everybody is able to understand. It will contribute to higher incomes of the farmers. So that is the reason certain initiatives have been focused on, right? Have a list, have a look at the list here. Certain initiatives have been focused on promotion of sandalwood, right? Promotion of coconut. Coconut is also high value product, by the way, right? Promotion of cashew production, promotion of cocoa, etc. So some of these high value agriculture products have been identified by the government. Now promotion of the production will be done. Farmers will be able to produce, and not just in any part of India. They have identified certain commodities from the northeastern part, certain commodities from the right coastal states, etc. So production of these will be promoted, and right, basically now the farmers will be able to earn better returns by selling the high value products in the market. This is one very important announcement. Second very important announcement is the Bharat Vistar. Bharat Vistar. Bharat Vistar. What is this Bharat Vistar? The government of India earlier had promoted a model, right? Basically, the model called as Agri-Stack. Agri-Stack. I'm pretty sure all of you heard of the term Agri-Stack. What is the basic idea of Agri-Stack? Different types of technologies which are associated with agriculture sector are stacked, are connected, are basically arranged, right, in the form of layers. That's the reason this is called as a Agri-Stack. Right? It is a type of digital public infrastructure that has been promoted by the government of India along with many other types of DPIs. So now government of India simply says there will be an AI that will be developed. There will be an AI that will be developed. And this particular AI, name of this is called as Bharat Vistar. So what is the function of this particular AI? Please have a look at this. Bharat Vistar essentially stands for virtually integrated system to access agricultural resources. This particular AI tool will provide information to the farmers. It will provide information. It has collected lot of information, including Agri-Stack now. It has collected the information. Now in multiple languages, this information will be delivered or will be provided to the farmers. For example, let's say a farmer wants to find out what kind of loans are provided by the banks for agriculture commodities. The farmer wants to understand what is right basically the rainfall estimation in the current cycle of monsoon. The farmer wants to understand right what kind of initiatives are being implemented in that specific region. Farmer wants to understand what kind of crops are eligible for the kind of soil which is present in the land that is cultivated or used by the farmer. All of this information you can easily access as a farmer using this particular AI tool. Right? So government of India now says we are going to develop Bharat Vistar. Everybody is okay? Now, if you have any doubts, please hold on. I'll address your doubts at the end of the session. Do not panic right now. The government, in order to promote women empowerment, also has announced She Mart. Yes, H-E, She Mart. She basically stands for self-help entrepreneur. Self-help entrepreneur. Earlier, the government of India had announced one more initiative, Lakhpati Didi, where the objective was to ensure that the women identified and covered under the initiative will be able to earn at least 1 lakh rupees per annum. Now, in addition to that, just like that, there is one more initiative, She Mart. What is basically the idea of a She Mart? These will be basically the retailing units, community owned retail units which are led by women, which are owned by the women entrepreneurs. This will help a promotion of women empowerment. This will add to the income sources for the women. Right? So that is basically the idea of a she mart. This is targeting women in the rural part of India. Right? So these are some of the areas that have been covered under the agriculture sector. Can I move on to the next one? Infrastructure. Sir, we need economic survey and budget in mains point. My dear, economic survey, I'm repeating this again for the benefit of those who have joined late. Starting this week, I'll be taking special classes where I'm going to discuss chapter by chapter in a comprehensive manner all the chapters relevant for Indian economy for both prelims and mains from the survey. But that will happen on the platform. When is the class? What is the time? Where is the link of the class? All of that detail will be provided in the Unacademy IAS English official Telegram channel. Let's go forward. Infrastructure. Right? In infrastructure, what are the important announcements? Have a look at the first one here. Setting up infrastructure risk guarantee fund. Risk guarantee fund. Just like we have discussed earlier, credit guarantee fund. What is the basic idea of a risk guarantee fund? Let's say an infrastructure developer wants to take a loan from a bank. There is always a very high amount of risk that the project may not be completed. The borrower, that is the developer, might default on the payment. Correct? Might default on the payment. It might become an NPA for the banking sector. And in the last 1 decade, the government of India as well as RBI have taken lot of measures, have gone through a very painful process which has helped reduce the NPAs. Now, there is a problem that we want infrastructure to be promoted. But if the borrowers take loan and start defaulting, these will add to NPAs. And the banks will be very much worried about giving loans for infrastructure. They might simply stay away from lending to infrastructure. And by the way, infrastructure lending is required right now. We require a lot of infrastructure lending. So what is the government proposal here? There will be a fund set up. Infrastructure Risk Guarantee Fund. What is the basic idea? A bank will provide a loan. There will be a guarantee provided up to a certain extent on the loans given by the banks to the infrastructure developer. And because the guarantees are provided, obviously the banks or the lenders now are not so much worried. The risk associated with the project will go down. The banks or the lenders will be more open to lend for infrastructure projects. By the way, is this the only type of initiative that has been taken by the government in recent times? Absolutely no. The market regulator is promoting infrastructure bonds, where you can issue bonds of a longer tenure, borrow from the market. Now we are promoting corporate bonds. Earlier, the government of India set up NABFID, which is mainly involved in the promotion of, let's say, infrastructure lending. So multiple types of reforms have been implemented. This is one more such reform. Next one, recycling of real estate assets of CPSCs through setting up dedicated REITs. What is a REIT? Real Estate Infrastructure Trust. There are two types of investment models. New type of models, by the way. One is InvIT, Infrastructure Investment Trust, and the other one is REIT, Real Estate Investment Trust. Real Estate Investment Trust, REIT and InvIT. So now there are certain real estates which are simply falling idle with the CPSCs. There are a lot of real estate assets. You must have seen a lot of these CPSCs will be owning the real estate projects or real estate assets without utilizing them properly. So can we monetize them? Monetize in the sense, can we get certain value from these particular projects? Yes, there is a model. Right? That particular model is called as Real Estate Investment Trust, wherein a sponsor will be there. Right? Basic model of REIT, by the way. A sponsor will be there. They will invest a certain amount of money. They will take all these real estate assets. They will try to develop certain projects, use the real estate for certain purposes, and thereby generate money, generate revenue from the real estate that they have utilized. But please understand, this model essentially is useful for what purpose? Whatever real estate assets are falling idle, you can get money for it. In addition to this, you can attract other investors who will be investing and purchasing REIT units. That is REIT, Real Estate Investment Trust units will be purchased by other investors. We are doing the same model in case of national highways as well. But there it will be called as InvIT. Everybody is reading, everybody has read the basics. Please do let me know in the chat section. The National Highways Authority of India, NHAI, National Highways Authority of India has monetized a lot of national highways using this particular model of InvIT. Now we want to use the model but for real estate assets which are falling idle with central public sector enterprises. Third one, dedicated freight corridors. There are multiple freight corridors which are already developed. And what is the use of the dedicated freight corridors? These are essentially done or developed, maintained in order to promote industrialization. The whole idea is you need very good infrastructure for transportation. Transportation. The government of India has been promoting waterways. That is also there. One of the announcement is associated with waterways. But earlier, even before we started promoting waterways in recent times, we have developed multiple dedicated freight corridors, which are essentially used for the transportation of raw materials, transportation of finished goods, etc. Right, so these are called as DFCs, dedicated freight corridors. Government of India now has announced 2 additional dedicated freight corridors. These are the places which will be connected. Next one, 20 new national waterways would be operational now. 20 more national waterways would be made operational. Please understand, earlier there were only around 5 national waterways. The government of India introduced the National Waterways Act and they identified more than 100 waterways, including the existing 5, and they basically said all of these waterways would be declared as national waterways. And the government basically set up the National Waterways Authority of India. And using that authority, we are basically promoting now. We are promoting transportation through waterways. At promoting the transportation through waterways. And what is the use of promotion of waterways? In terms of emissions, waterways are very efficient. These will have lowest emissions. In terms of land acquisition, there is no problem with this. In terms of cost of transportation, this mode of transportation is the cheapest. And that's the reason the government of India is actually promoting national waterways. So to the existing waterways, 20 more waterways will be operationalized. That is one more announcement. Next one, in terms of shipping, last year there was a lot of discussion. Because mind you, whenever you talk about shipping as well as containers, because one announcement is on shipping, another one is on containers. When you talk about shipping and containers, India doesn't account for a large fleet of the ships in the global market. Again, I'm talking about the civil fleet, not about the army, not about the naval ships. Right? Civil ships, that is used for commercial ships, to be very precise. We do not have sufficient number of commercial ships. We do not account for the large percentage of container manufacturing also. And which countries account for majority of this? Topmost is China. Be it commercial shipping or be it in terms of production of containers. And during pandemic as well as the post-pandemic, we have experienced problems because we do not have sufficient fleet number as well as container number. So Government of India has been promoting production of the shipping in India as well as promotion of container manufacturing in India. So the new announcement is ship repair ecosystem. Ship repair ecosystem will be developed along the inland waterways in India. Launch of coastal cargo promotion scheme. What is the importance of this particular scheme? The government wants you, that is basically a company which is using the road as a mode of transportation. They want you to shift from the road to, let's say, waterways. They don't want you to use roadways. They want you to use waterways. How do they ask you to shift? Provide incentives. Simple. Provide incentives. once incentives are provided to you, in order to get that particular incentive, which will reduce the cost of transportation further for you, you will automatically make a movement from road road mode of transportation to inland mode of transportation. Everybody is okay, right? So launch of coastal cargo promotion scheme. This is one more important announcement. Seaplane VGF scheme also has been announced. What is a VGF? VGF stands for viability gap funding. Viability gap funding. Under this, essentially to promote investment in these kind of projects, certain assistance will be provided by the government. VGF essentially means certain assistance, not essentially a loan, certain assistance will be provided by the government, which will essentially reduce the amount of investment that you are expected to or you must do. That investment requirement will automatically go down. And automatically because of that, the project becomes more attractive. Project becomes more financially attractive to you. That is basically the idea of a VGF scheme. Next, 2 lakh crore support for the states under SASCI scheme. What is this particular scheme? This initiative was announced by the government of India during pandemic. Objective was very simple. The government was worried that the state governments will not be investing sufficient amount of money in the infrastructure projects. So government introduced this particular scheme under which 50-year interest-free loans are provided. 50-year interest-free loans are provided by the government. Right? So that is essentially, right, introduced during the pandemic. Over a period of time, the amount has been increased. This year in the budget, which will be implemented from the 1st April 2026, this amount will be increased to 2 lakh crore rupees. Next, there will be certain initiatives in the form of development of corridors, which will be focused on Purvanchal states as well. Done? Or Purvanchal region as well. So these are some of the important announcements in the context of infrastructure. Couple of more announcements associated with, right, let's say the areas that we have covered so far. Mahatma Gandhi Gram Swaraj Initiative. Mahatma Gandhi Gram Swaraj Initiative. What is the importance of this? The government of India will be announcing or implementing this particular scheme, which will be focused on promotion of khadi industries. It will be focused on promotion of khadi industries. And what is the importance of this? Khadi has been a part and parcel of, right, let's say India's ecosystem or India's system as of now. Earlier, the contribution was much higher. Participation of khadi industries was bit higher. Over a period of time, it has taken a hit because of negligence by the stakeholders, even by the consumers, etc. Government now simply says there is a very large potential for khadi. Potential is there. What kind of potential? There is a demand, rising demand in the domestic market. There is also rising demand in the global market. So now the area or the objective of the government of India is this initiative will be implemented. This will be implemented. And once this particular initiative will be implemented, certain funding has been allocated for the next 5 years. The focus will be on promotion of training, promotion of, right, let's say infrastructure building, right, promotion of production, exports, etc. And the government has stated that this will be one of the initiatives that the government will now focus under one district, one product. All of you heard of this? One district, one product, ODOP. Under the idea of a ODOP, the government of India simply says every district in India will have one or the other product which has very high export potential, market potential. That particular product will be identified. Any issues, any barriers that the stakeholders are facing will be addressed, and we are going to promote export of this in the international market, which will help the districts earn huge amount of revenues. And this is important for a simple reason. Historically, if you see, there are very few districts in India which have been able to generate huge amount of income or contribution to GDP or manufacturing or even exports. There are very few states, and these particular states and within the states, districts are generally located along the coastal region. But the idea is there are other regions in India. There are other products in India. There are other districts in India. We need to ensure the promotion of exports is done from these regions as well, which will help ensuring the population in this region generate certain economic activity, ensure revenues are generated, ensure exports are done to the external market from these districts. And that is essentially one district, one product. So now Khadi, right, which will be promoted under this initiative, will be targeted under ODOP. Next one, Biopharma Shakti. Shakti simply stands for Strategy for Healthcare Advancement through Knowledge, Technology and Innovation. Right, what is this Shakti, Biopharma Shakti? The government simply states in recent times there is a lot of concern associated with non-communicable diseases. Non-communicable diseases. For example, the diseases associated with the sedentary lifestyle that is followed in India, diabetes. Right? India has one of the largest, let's say, number of people suffering from diabetes. And again, we come across this particular problem that the non-communicable diseases will have a higher burden in the total, right, population in India. And that will hurt economic growth prospect. That will basically hurt even the household incomes. It will have an impact on the productivity of the population as well. In fact, during the Independence Day speech, I don't know how many of you heard of the speech. During the Independence Day speech, the Prime Minister flagged this particular issue. The Prime Minister simply stated, per capita oil, edible oil consumption in India is very, very high. Per capita, correct or not? How many of you heard of this? Do let me know in the chat section. The per capita edible oil consumption is very high in India. We should be cutting it by 10%. We should target the reduction of the oil consumption. Right? So please be very careful. UPSC can ask you a question about it now. Right? So we are now promoting one more initiative, Biopharma Shakti. Funds will be allocated 10,000 crore for 5 years. Objective is we are going to promote an ecosystem where, right, let's say investment, R&D associated with biopharma will be promoted under this initiative. Done? Next one, buyback tax. This has created a lot of discussion now. Listen carefully. Buyback tax. What is basically idea for buyback tax? Let's say there is a company. Company is listed one. It has issued certain shares. Now, if the company will purchase the shares back, this is called as a buyback. Everybody is okay, right? The company, again, please understand, the company can be listed or unlisted. Because if it is listed, the shares are available in the market for trading. Can there be a buyback by an unlisted company? Yes, promoters are there, right? From the promoters, the company can go for a buyback. So listed as well as unlisted. But what is the basic idea? In the year 2024, the government of India made certain changes to the buyback tax. What changes? The government of India simply stated that the buyback tax, that is once the company will purchase the shares, the company will pay money to the shareholder, including promoters. Company will pay money to the shareholder. Now this money which will be paid to the shareholder will be treated as a dividend. So far so good, will be treated as a dividend. And accordingly, the taxes will be imposed and collected. Accordingly, because dividend means it will be one of the sources of income. And once it becomes source of income, there will be a tax treatment on it. So Government of India went a step ahead. They introduced the idea of a TDS here. In this context, they introduced TDS, tax deduction at source, which means the company, when they will pay money to you, when they purchase the shares, they will pay money to you. They will hold the amount, TDS, they will give it to the government. Right? And basically, this was the methodology that was introduced by the government. Now, some of you will be thinking, why, sir? What is the logic? Logic of the Government of India was, lot of these particular companies were basically going for the concept of a buyback rather than paying dividends. So Government of India introduced this. Now this particular policy has been changed. This has been changed. Government of India now said, that is in today's budget announcement, whenever the company will go for a buyback, it will be treated as a capital gains. Correct? Everybody is okay with this? Now the money that you will collect, right, that is, let's say you are a shareholder, I am the company, I'll pay the money to you, I'll purchase the shares back, buyback. The money that I pay will be treated as capital gains. And whatever is the capital gains tax, that will be imposed and collected from you. This is basically the new announcement. What is the benefit? Some of you will be thinking, what is the benefit? Capital gains tax rate is much lower. The capital gains tax rate is much lower. But now there is a danger that lot of the promoters, they will also pay lesser amount of tax because it will be treated as capital gains tax. The government has made certain change. If you are a promoter, there will be additional buyback tax. I'll repeat. If you are the promoter of the company, there will be an additional buyback tax. Not like a normal shareholder, there will be additional buyback tax that the promoter has to pay. That is, the burden of taxation on the promoters will be higher even under the new, or let's say new system or under the change system. Next, container manufacturing. The government of India essentially has stated that they will promote container manufacturing. Again, the argument is simple. A certain amount of funds have been allocated for 5-year duration. Idea is to promote as much as possible the containers in the domestic market rather than being import dependent. Next one, carbon capture, utilization and storage. Just a second. Carbon capture, utilization and storage. CCUS. CCUS. What is this idea for carbon capture, utilization and storage? There are two terms in the context of ecology and environment. Specifically, the Paris Climate Agreement. You must have heard of two terms: adaptation and mitigation. Correct? Adaptation and mitigation. That is the CCUS essentially is a type of a mitigation technique. It is a type of a mitigation technique. What is done under this? The carbon that is emitted will be captured. There is a particular process, a 3-stage process like this, developing kind of a technology where the carbon capturing will happen and this will reduce the emissions. It is a type of a mitigation technology. Now for this, the government of India has allocated 20,000 crore rupees. It has allocated 20,000 crore rupees. Done? So this one is an announcement. Okay. Next one, certain important pointers. Tourism. In case of tourism, the government has stated that it is an important source of employment generation. It is an important source to attract foreigners into India. Within the domestic market also, a lot of tourism activity is conducted by the residents of India. You must have seen what is happening in different tourist places right now. So argument is, let's focus on tourism. Let's promote, let's say, higher contribution to the economic activity, employment generation. So for this, what are the announcements? There will be one entity that will be set up, National Institute of Hospitality. A new entity will be set up which will basically provide a lot of personnel, training, etc. Second one, there will be an initiative that will be implemented to provide upskilling to 10,000 guides. Upskilling to 10,000, 10,000 guides. In multiple places, historical places, guides are there. A lot of times, they are not properly skilled. They do not have correct, let's say, skill sets to explain, which will basically hamper the amount of revenue they can generate. At the same point of time, it will also hamper the experience of the tourist. The tourist is unhappy with the kind of, let's say, services provided. They will recommend other tourists not to go there, or else go there but don't use a guide, etc. So in order to promote, let's say, the tourism places in 20 iconic tourist sites, there will be 10,000 guides who will be provided upskilling by the government. Next, there will also be a data or a grid database which will be developed. National grid database which will be developed, which will have all the data sets that is associated with the tourist places in India. The name of that, National Destination Digital Knowledge Grid. This is one more very important data set. And if you're wondering, sir, what is the use of all of this? Think of it. Foreign tourists will come to India, or you want to go to another state, specifically, visit a particular historical monument. A lot of times, you do not get accurate information. You do not get accurate information. Information associated with location of the site, or information associated with which day it is open, which day it is closed, information associated with how do you reach that particular place, right? Or once you reach there, what you're supposed to visit, etc. So there will be a national destination digital knowledge grid database that will be developed, which will digitally document all the places of significance. But again, before I go forward, here is a point. These are announcements. I hope you understand the right. Let's say the devil's advocate idea. These are announcements. The devil will always be in one details, and second, you will have to wait and see how these will be implemented. How these would be implemented, you'll have to wait and see. Right? So a lot of these are announced, but the implementation might be delayed. Implementation might be shelved by the government because the project is not feasible once the right implementation stage is arrived. Implementation for that funds would be allocated, but there is no proper manpower. No ministry is going to implement it, or ministry is least bothered about it. Right? So underutilization of the funds might also happen. But anyways, these are the announcements which you need to understand for the UPSC examination. To develop ecologically sustainable mountain trails, turtle trails, and bird watching trails, the government will be targeting and developing this. In addition to this, nowadays there is a lot of focus on trekking activity. Nowadays, there is a lot of focus on the trekking activities. So government simply said, yes, we will focus on, right, let's say the trekking activities as well. We will develop certain regions. There are certain states in India, places in these states where a lot of trekking is conducted or people are interested in trekking. Why not develop the trekking trails, by thereby providing proper services, right? Let's say staying services, drinking water facility, or transportation to and fro, etc. Develop these particular regions which will be attracting lot of, let's say, the human activities there. India to host the first ever Global Cat Summit. In fact, this was announced last year as well. It was announced last year also. This year, we will be hosting the Global Big Cat Summit. We are expecting the heads of multiple countries to participate in this. Next, 15 sites into vibrant experimental cultural destinations. Certain historically important sites have been identified. Again, what will be final 15 list? Don't worry. 15 sites will be identified. Now, in these particular 15 sites, they will develop these in terms of, let's say, providing better services to the tourist. For example, let's say I go to this particular site, lot of digging has been done by the Archaeological Survey of India. Right now, we are not allowed to enter into these particular places. But now Government of India simply says, why can't we provide the services where we can, right, basically appoint personnel. They will take the people even in these particular areas. Right? Guided walking paths can be established. Right? So this will enhance the tourism experience. It will essentially increase the experience. Right? When you go, you are not simply looking at it and coming back. You are in fact going into those particular trenches, or let's say the areas where the digging has happened, etc. All of this will be undertaken by the government. And finally, Buddhist circuit. In the northeastern region, certain areas have been identified. A Buddhist circuit, essentially a connection to promote tourism. Connected network to promote tourism within the northeast region will also be done. These are some of the announcements in the context of tourism. Next, services sector. Services sector. Services are important for Indian economy for a simple reason. The economic survey itself says services contribute more than 54% to India's GDP. Services contribute more than 54% to India's GDP and more than 60% to India's GVA. GDP and GVA. Right? That is the importance of services. What are the reforms or what are the important points in terms of announcement done by the Government of India? First one, the government has stated that they will set up a high-powered committee. High-powered standing committee will be set up. What is the role of it? We are trying to promote the idea of education to employment and enterprise. Education to employment and enterprise. What is the basic idea? What is the potential of services sector? To what extent jobs can be generated? What kind of jobs can be generated? What is the impact of artificial intelligence on the services sector? The committee will evaluate all of it, give suggestions, give recommendations to Government of India. Give recommendations to Government of India. That is one. Second one, there will be 5 hubs for medical value tourism. Private sector will be participating in this. It's a joint venture. 5 hubs will be developed for medical tourism. And within this, the government is integrating the idea of Ayush as well. Right? Ayush, that is Ayurvedic, Unani, etc. The integration of Ayush will also take place. What is the basic model here? There will be, right, let's say a complete ecosystem developed at 5 places. Complete ecosystem in the sense, you want to get the treatment done, right? Indian, foreigner, because medical tourism is booming in India. You want to get the complete treatment done, rehabilitation done. You want to get access to, let's say, the alternative, right, the treatments as well, the other streams of treatment such as Ayurvedic, etc. Right now, you do not get all of these at one place. These ecosystems or the hubs will be developed which will provide all of these services. So these will be developed in how many places? 5 places. In addition to this, the government also stated that there is a rising demand for Ayurvedic products. There is a rising demand for Ayurvedic products, not only in India, but also in the global market. So how do you basically satisfy, how do you ensure that the demand will be met? We will scale up testing facilities. We are going to scale up the testing facilities. So 3 new All India Institutes of Ayurveda, upgrading Ayush pharmacies and drug testing labs will be done by the government. And the logical outcome of this, or the expected outcome of this, is that with these kind of infrastructure facilities developed, we will be able to produce more of Ayurvedic medicines. Testing will be done, certification will be done, and the recognition will be there in the international market. We will be able to, right, cater to the demand for these particular products, not only the domestic market, but also in the international market. Everybody is okay? Right? In addition to this, there is now focus on orange economy. Orange economy. Last year, even the Prime Minister spoke about this. Orange economy basically focuses on the creator market, creators economy. Right? So for example, in case of India, the YouTube videos, through the YouTube videos, according to the government data, more than 21,000 crore rupees worth of revenues have been generated. Right? The creators market, the overall creators market employs millions of people in India. It is expected to become worth $50 billion over a period of time. Today it is around $30 billion. So we will be promoting the orange economy now. We'll be promoting orange economy by setting up AVGC content creator labs at 15,000 secondary schools as well as 500 colleges. AVCG essentially stands, right, for animation, visual effects, comics, and gaming. Right, so these particular, right, let's say the labs will be set up amongst or across multiple states in India. Done? Can we go forward now? Do let me know. I'm entering into the later part of the budget now, the taxation part. Right? What are the important tax proposals? Everybody is okay? Please do let me know in the chat section. Okay, let's go forward. Taxation. First one, there are certain changes that have been announced in the context of TCS. What is TCS? Tax collection at source. You will come across 2 terms. One is a TCS and the other one is TDS. Tax deducted at source, tax collection at source. What is the difference between both of them? TDS is imposed on income. TDS is imposed on income. TCS is imposed on sales. Simple. TCS is imposed on sales. Let's go forward. So reduce TCS rate on the sale of overseas tour programs. Earlier, if you purchase a tour programs, the government of India had imposed a TCS of, right, 20%. Now this has been reduced to 2%. Logical argument is it will reduce the cost that the, right, let's say tourist will have to pay when you book a package, when you book a foreign trip like this, right? That is the first one. Reduce the TCS rate to 20% on the LRS remittances. What is the basic idea for LRS remittance here? There is an initiative of Reserve Bank of India, liberalized remittances scheme. Liberalized remittances scheme. Under the liberalized remittances scheme, annually every individual in India is allowed to take out $250,000 from India. Individual, $250,000 per annum without any approval of RBI. Without any approval of RBI. If you want to take out more than 2.5 lakh, you'll have to take the approval of Reserve Bank of India. So far so good. Now, the TCS earlier, if you take out this particular money, let's say you pay for tuition fees in USA. You pay for medical fees for a treatment that you're getting done in Australia, or for that matter, Germany or Britain. Example, there was a TCS applicable on the remittances that you're taking out. Now this particular rate, which was, right, 5%, it has been reduced to 2%. It has been reduced to 2%. Next one, a uniform customs duty. Lot of changes have been announced under the customs duty as well. But before I tell you the changes under customs duty, expectation was that the government will announce a complete overhaul. I repeat, a complete overhaul under the customs duty as well as capital gains tax. Complete overhaul under the customs duty as well as capital gains tax. Has it happened? No. Right? No. Complete overhaul, right, was expected, has not been announced. Let's go forward. A uniform customs duty for all the personal imports. Right? For the personal usage, whatever you import into India, a customs duty on that has been reduced. According to the announcement done by the finance minister on the floor of the parliament, it will be reduced from 20% to 10%. Next one, duty will be exempted on critical as well as cost intensive components for microwave ovens. If you reduce the duty, if you exempt the duty, essentially this will help, right, in cheaper imports and in production of the final good in the domestic market. The cost of it will be lower. Next one, duty will be exempted on cancer drugs as well. Many of these particular cancer drugs or the drugs which are very costly, which will be used for the treatment of certain diseases, the government of India has announced exemption on customs duty. And by the way, this is not the first time that the announcement has been done. Earlier also, similar announcements in the form of customs duty exemption has been done by the government. The personal imports for drugs or medicines and food for 7 more rare diseases, it has been exempted. Exemption on the parts or components, engines for manufacturing aircrafts, capital good production. If you import a part, spare part to produce this in India, the customs duty you don't have to pay. Right? It will be exempted. And finally, exemption for goods for nuclear power projects. Nuclear power projects. That is for development of the nuclear power projects in India. If you import anything, customs duty will not be implied or customs duty will not be imposed. There is an exemption provided. And this is applicable for any nuclear capacity, any project of any nuclear capacity. Done? Next, under taxation, exemption on capital goods for manufacturing of lithium ion cells of battery energy storage system. The government of India earlier announced an initiative, BESS, Battery Energy Storage System. What was the importance of the BESS? In the context of solar energy, a lot of times you will come across the problem of duck curve problem. That is intermittency problem. Supply and demand mismatch is there in the context of renewable energy in India. In order to address that, the government has been promoting an initiative by the name of BESS. Now under that, you are going to develop batteries. To produce the batteries, you are going to import lithium into India, lithium ion batteries into India. The customs duty on that now will be exempted. It will be exempted. Next, the MAT regime rationalization. What is basic idea for MAT here? MAT stands for minimum alternate tax. Minimum alternate tax. The basic idea of minimum alternate tax is there are certain companies which will earn book profits. Book profits means total expenditure minus, right, let's say, total revenue minus total expenditure. That is called as book profits. From the book profits, the company will claim lot of deduction, exemption, etc. Then will arrive at taxable profit. Now the taxable profit is so low. I repeat, the taxable profit is so low, so negligible. The government will end up collecting 0 rupee corporate tax or very negligible corporate tax. Everybody is able to follow the sequence here? Please do let me know. Everybody is able to follow the sequence? I'll repeat it again. What is the basic idea for minimum alternate tax? Companies will report the total revenue and total expenditure. The difference between that is called as a book profit. Companies earlier did not pay taxes on the book profit. They rather now from the book profits used a lot of deduction, exemption, arrived at taxable profit. On the taxable profit, they paid taxes to the government. And that taxable profit would be negligible or zero. These companies were called as zero tax companies. Zero tax companies. In order to address the problem of zero tax, right, that is basically companies not paying any tax or negligible tax, the government earlier, right, 3 decades ago, when Mr. Rajiv Gandhi was a prime minister, introduced a minimum corporate tax, wherein the tax was imposed on the book profits and collected if it was higher compared to taxable profits. So that idea was implemented. Later it was renamed. It was rebranded as minimum alternate tax. Until now, the minimum alternate tax rate is 15%. Government now says going forward, it will be reduced to 14%. It will be reduced to 14%. In addition to this, no more MAT credits carry forward. MAT credits will not be allowed to be carried forward from the next year. That is essentially, imagine you have calculated taxes on the book profit as well as the taxable profits. If the book profits on this, the tax amount was higher, you were supposed to pay the tax to the government. The difference was given to you as a credit, which you were allowed to claim later. So these particular concepts of MAT credits will not be allowed to be carried forward anymore after next year. But in addition to that, the MAT rate will be reduced from 15% to 14%. Next one, taxation of buyback being aligned with capital gains. Buyback I've already covered. Tax holiday for any company which will provide cloud services. A lot of these particular companies are setting up cloud servicing agencies or cloud servicing companies. And that is global centers. Now these particular companies, foreign companies, if they set up cloud servicing company in India and provide the cloud services to Indian clients using Indian supplier, then there will be a tax holiday. Tax holiday essentially means let them earn profits. They don't have to pay taxes to the government. Right? The tax holiday till 2047 will be provided to them. Next, important fiscal measures or fiscal matters. Please make a note of these particular points. And when I say note, when you download the PPT, please look at these. Point number 1. The government of India until now, until recently, used to focus on fiscal deficit. It used to focus on fiscal deficit. That was the main policy anchor for the government. Starting next financial year, remember this, starting next financial year, fiscal deficit will not be the policy anchor. Rather, the debt to GDP ratio. The debt to GDP ratio will be the policy anchor. Meaning what? Government will be now more focused on reduction of debt to GDP ratio. It will be more focused on debt to GDP ratio reduction. According to the government policy, which was announced last year, now will come into force from the next financial year. By financial year 31, the government of India has stated that they want to reduce the debt to GDP ratio to 50% of GDP. 50%, of course, with the flexibility of this side, that side, plus or minus 1%. Right now, the debt to GDP ratio is around 55.6%, that is budgeted for financial year 26 and 27. For the current financial year, that is for the financial year 26, financial year 26, for the financial year 25 and 26, the debt to GDP ratio is right basically 56.1%. So it is budgeted at 56.1% for this year. Next year it will be further reduced to 55.6%. And by the financial year 31, you want to drag it down to 50%. This is one. Second important one, the 16th Finance Commission report. The Finance Minister stated the 16th Finance Commission, which was set up earlier by the government, has submitted the report to the government. The government has accepted the report. And according to the Article 281, 280 is regarding Finance Commission. 281 states that the Finance Commission report along with, right, let's say the memorandum of, right, let's say acceptance, basically what has been done by the government, that memorandum has to be submitted on the floor of the Parliament under Article 281, and that has been done by the government. The government has stated the 16th Finance Commission has recommended a vertical devolution of 41%. Same as the 15th FC. 15th FC also says 41. 16th FC also has given the recommendation of 41. So that particular recommendation has been put in place. In addition to that, there will be grants which will be provided by the center to the states based on the Finance Commission recommendation itself. And the amount of grants which will be transferred in the next financial year from the center to the state will be 1.4 lakh crore. Right, so these are some of the important points. Now let's look at certain data. Please have a look at the graphical representation. Please look at the graphical representation. The capital expenditure, you will see that since pandemic, the capital expenditure has kept on increasing. The pace of increase, right, during pandemic as well as post-pandemic has been very, very high. Observe that. This is important for a simple reason. The government again and again has been stating the same. It is committed to the investment in infrastructure. It is committed to invest under the capital head, which will help create assets, which will promote confidence of the private sector in the market, which will attract companies to invest in the domestic market. So capital expenditure, the budgeted for the next financial year, the central government will be investing or spending 12.2 lakh crore rupees. The center will be spending 12.2 lakh crore rupees. In addition to that, right, the amount, that is the grant in aid, center to the state, grant in aid, the grant in aid will be 4.9 lakh crore rupees. So put together the total effective capex will be 17.1 lakh crore rupees. Not a small amount, very, very large amount, 17.1 lakh crore. And as a percentage of GDP, the effective capital expenditure will become 4.4%. 4.4%. That's a very, very high amount of expenditure which the center as well as the states will be investing in the next financial year. Next important set of data, the deficit trends. Deficit trends. What has happened to the fiscal deficit, revenue deficit, etc. Please look at the data set. The fiscal deficit for the current financial year is basically revised at 4.4%. And for the next financial year is budgeted at 4.3%. In addition to this, the revenue deficit is 1.5% for this year as well as budgeted next year. Right? In addition to that, primary deficit 0.8% budgeted this year or revised this year. Next year budgeted at 0.7%. If you ask me, sir, should I remember all of this data? My suggestion, focus on fiscal deficit. Just focus on fiscal deficit. You don't have to remember all the types of deficit numbers. Concept wise, yes. Remember all the concepts associated with deficits. But number wise, my suggestion, debt to GDP ratio as well as, right, let's say the fiscal deficit. These are the two most important indicators. Questions can be asked in the prelims as well as mains examination. Right, so what about the debt? What about the debt of the union government? What about the total debt in India? Whenever you talk about the debt, that is the public debt of the government of India, there has been a concern in recent times, that is during pandemic, the government of India's debt as well as the state's debt increased. The debt of center as well as the states increased. But the central government in the last 2 to 3 years has been implementing multiple policies such as rationalization of subsidies, such as eliminating cross subsidization or controlling cross subsidization under certain schemes, such as a just in time which has been implemented, which will basically moderate the amount of funds which are going to the states at what time, etc. Because of these kind of reforms, the overall debt, the debt that is of the central government, public debt, it has been brought down. It has been brought down. Right? So this is a very good indicator. And that is where the central government debt is much lower now compared to what it was during pandemic. The state debt has been higher. And that is what the economic survey also states. The states must control their debt. Reason being, when you look at the credit ratings, when they rate the countries, they do not focus only on the central government debt. They will also look at the state government debts. So on one side, the central government debt has reduced by more than 7 percentage points, but the state debts remain elevated. That might hurt the sovereign credit rating of India. That's the reason the economic survey argues that the states must control their debt. And finally, please look at where does the government get 1 rupee and where does the government spend 1 rupee. Right, have a look at this. Where does the government get 1 rupee and where does the government spend 1 rupee? Right, so government, if you look at this, the first pie chart will provide you information regarding the receipts or incomes. The receipts or incomes. And what you will see is the government is earning very high amount of receipts in the form of taxes, that is corporate tax, income tax, customs, union excise and GST. A large chunk of the total amount of income generated is because of, right, let's say the tax receipts itself. In addition to this, there is borrowings that will be done by the government. There are non-tax receipts which are collected by the government. Right, so these are certain pointers. What can UPSC do with this kind of a point? They might ask you in the prelims examination, according to the recent budget estimates for the year 26 and 27, arrange the following in increasing order of contribution. Arrange the following in decreasing order of contribution. This kind of question can be asked in the prelims. Please make a note of it. Now, out of the total money collected, where does the government spend money? For what purpose does the government spend money? These are the, right, let's say expenditures. The share of the states, right, that is the tax devolution, vertical devolution will be 22%. 22%, that is out of 100 rupees, the center will pay 22 rupees to all the states put together. In addition to this, there are grants also which are recommended by the Finance Commission, that will be 7%. There are schemes, that is the centrally sponsored schemes and central sector schemes, that put together will become 25%. There are also interest payments, defense, right? Interest payment is 20% and defense is 11%. So this is the, right, major source of expenditure for the government. And so this will provide you information regarding where does the government earn, where does the government spend. Done? Right, so this is the comprehensive analysis of the announcements done by the finance minister today in the union budget that would come into force from the 1st April 2026. Before I wind up and start taking the questions from your side, I'm reiterating this. Whatever PPT I've used here, you will be able to download the PPT. Please don't worry. Second, I'll be taking, right, let's say the chapter-wise discussion of economic survey, but that will happen on the platform. Join our official Unacademy IAS English Telegram channel. From there, right, the information you can get it regarding the schedule, regarding the class link, etc. Use it to join the session, right? That is special classes on economic survey. Okay, now, any questions? And the third and the most important part, third and most important part, Unacademy has scheduled, right? It will be conducting the All India test on the budget as well as economic survey, right? It is basically for all the aspirants who are going to write the civil services 2026. The test will be held on February 8th. Timing is 11 a.m. The link is pinned in the comment section. Use the link to register for the test, appear for the test. And if you're watching a recorded session or recorded video, the link will be provided in the description box. Use it to register and appear. Okay, let's go forward. MAT regime, point in a little detail. My dear, for that, please go through the basics first. You should know how the profit and loss statement is prepared. Please go through that. You will record your expenditure, your income. Income is greater than the expenditure. This is called as book profit. Let's say your income is 100 crores. Your income is 100 crores. Your expenditure is 80 crores. Book profit will be 20 crore. Now from the book profit, there will be deductions. What you get is taxable profit. What you get is taxable profit. Now, if you claim lot of money here, deduction, exemption, etc., if you claim a huge amount of money, the taxable profit will be very less. What if the taxable profit becomes 0 rupees? You might have 30% corporate tax, you might have 50% corporate tax, doesn't matter, government will end up collecting 0 rupee corporate taxes. These were called as zero tax companies. In order to basically have a control over these kind of companies, in order to collect taxes from these kind of companies, MAT was introduced. Under MAT, what happens? I will calculate how much is the taxable profit, and I will also calculate earlier 15% of book profit. 15% of book profit, and let's say 30% of taxable profit. Whichever is greater, that will be collected as a tax. Now, instead of 15%, it will be made 14%. Okay, let's go forward. Why lots of infrastructure lending required, sir, as you said? Because in case of India, the infrastructure investment that has been planned by Government of India is very high. According to National Infrastructure Pipeline, we have a proposal to develop infrastructure worth 110 lakh crore rupees. I repeat, more than 110 lakh crore rupees. All the 110 lakh crore rupees not invested by the center, not invested by the states. You need private sector also. But whether it is the center, state or private sector, they will borrow from the market, and specifically a lot of borrowings will be done from the banks. Okay. Please explain total return swap. I'll repeat it. I am a bank. There are certain bonds. You will not purchase and get the physical delivery of the bonds. You will not get the delivery. You will not purchase it. In the sense, you will not get the delivery of the bonds. But you will pay money to me. On these bonds, you will pay money to me. Whatever is the coupon rate, I will pay you. If the price of the bonds goes up, right, I will pay you money. This is basically the model. You are not getting the bonds. You are not literally purchasing the bond. But what if the price of the bond goes down? You will incur a loss. Correct? But why am I providing this particular service to you? Why am I providing the service? I'm not doing a charity here. I am going to collect certain interest from you for providing the services. This is essentially the model of a bond. Okay, this kind of a bond. Sir, buyback tax is a type of capital. My dear, capital gains tax, right? Until now, please understand. Company will purchase the shares. Simple, company will purchase the share, will give money to you. The government until now would simply say the money that you have received is dividend. I'll treat this as a dividend. And on this, you'll have to pay the taxes to the government. Now government says, no, let's not treat it as a dividend. Once you sell the shares to the company and you get money, it will be treated as capital gains. It will be treated as capital gains, and whatever is the tax applicable to the capital gains, you will have to pay that particular tax to the government. Okay. Revenue receipt liabilities, can you tell it which type are there? My dear, what do you want to know under that? Numbers you don't require, by the way, right? You don't require numbers. My dear, the link will be provided in the description box regarding the PDF, etc. Don't worry, use the link. Okay, done. So that's it from my side in today's particular session, right? If you have liked the discussion that I've done, please hit the like button. If you're yet to join our YouTube channel, kindly join right now. Just a reminder again, national test will be conducted on budget as well as economic survey. Link is there, register, attempt it. Economic survey chapter wise, I'll discuss it in special class. That link will be posted in the official Telegram channel of Unacademy IAS. Join there using this particular link. That's it from my side. Take care and have a great day.